Be Wealthy and Smart, episode 1641.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is a recession coming? Because some people think there might be, and certainly there are reasons why they think that way. First of all, preceding virtually every recession in the United States has been an oil shock, and this has happened with almost every recession since the Great Depression, except during the COVID pandemic. I saw prices over $8 a gallon in Los Angeles, at least photos of it, and in general, prices at the gas pump are up $1.02 a gallon in the last 30 days, an increase of 35%. Mark Zandi, chief economist at Moody's Analytics, said, "I'm concerned recession risks are uncomfortably high and on the rise. Recession is a real threat here." And regarding higher energy prices, he said, "The negative consequences of higher oil prices happen first and fast. If oil prices stay kind of where they are through Memorial Day, certainly through the end of the second quarter, that'll push us into a recession." The problem is, however, economists are known to forecast more recessions than actually happen. There's an old saying that economists predicted 9 out of the last 5 recessions. And the yield curve has also been an incorrect indicator. When short-term rates rise above long-term rates, that can indicate a recession is in the future. But that also has been a warning sign that hasn't proven true. And it's provided false recession signals for much of the past 3.5 years. The real risk that we're watching is the labor market, because the consumer is responsible for about 2/3 of the economy, and that means if they don't have a job or confidence that they can't find another job, that can be an indication a recession may be coming. And the labor market created virtually no jobs in 2025. And when consumers are polled about expecting a recession in the next 12 months, 65% in March said they do expect a recession in the next year, and that was up 6% from the month before. The labor market lost 92,000 jobs in February, and the unemployment rate is still 4.4%. Luke Tilley, chief economist at Wilmington Trust, said, "I think there's much less inflation risk than Fed officials think, and more risk to the labor market to the downside than they stated." Other concerns have been stagflation, which is the combination of soaring inflation and slow growth, and that's what we had in the 1970s and early 80s. Today, we don't have inflation as high as it was in the 70s or early 80s, but it has been remaining stubbornly high above the Fed's 2% target rate at 2.9%. And then with interest rates generally higher, it's been harder to get loans and liquidity into the market. The stock market provides a wealth effect where when it performs well, people tend to spend more. Wilmington Trust's Tilley warned that spending has been heavily supported by rising asset prices, a dynamic that may not persist. He said, "We estimate that 20% to 25% of the spending growth has been boosted by the wealth effect coming from the stock market over the past 2 years. If you don't get the wealth effect boost, then you're going to lose a lot of that growth." When we look at how the economy is doing overall, gross domestic product is on track to grow at a 2% pace in the first quarter, which is better than the 0.7% increase in the fourth quarter, which was impacted by the government shutdown. The wild card is geopolitics and whether the war in Iran is over quickly or not. Other experts are saying the One Big Beautiful Bill will provide stimulus to growth by lowering regulations and boosting tax refunds that could help consumers pay for elevated gas prices. So we'll continue to follow along as the story unfolds and see how it turns out. But at this time, I don't think conditions are extreme enough to warrant a recession. The economy seems to be holding up well for now, and unless there's something extraneous that happens, we should see some good follow-through this year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.